Total income, 25% up to 180 billion, ranking as now one of the largest companies in terms of revenue on the African continent. And the number you have been waiting for, there it is, 43.7 billion shillings profit after tax. We are 5% down simply because we decided to maintain 32% of our entire loan book below at 13%, while we are funding the bank deposit at 18%. It's a trade-off, money or the customer, money or the client. There are times that you remember that the customer has been with Equity for 40 years. This is the 40th year of Equity, and it was not asking too much to shield and to protect our customers from the adverse effect of inflation. And as a result, 32% of our entire loan book didn't reprice. And as a result, well, our interest income grew at half the rate of interest expense. And as a result, we had a challenge. And of course, we decided to de-risk the future, ensure that the head of the macroeconomic situation is it, will take that 2.8 billion in provisions to ensure that it's a clean start, and there we are. Return on equity, 22.3% against cost of capital of 18%. So we're still close to 500 basis points above capital. If you look at quarter-on-quarter basis, we see how the assets sustained throughout the period. It's not an ad hoc growth, it's sustained. Net loans, again, sustained. Look at when you digitize loans. When you give the customers to get the loans when they want, they get the loans when they want, not when the credit officer wants to give the loans. When you give the customer 24-hour banking, they get it when they want. And we can see the effect of inflation on customer deposits, and that you can see customers to a great extent during difficult times they eat on their savings, and it's for that reason that we said let's support them by making the loans much more affordable. Balance sheet, in a nutshell, if we look at the entire balance sheet, the 1.8 trillion. I'm glad we are now not talking about billions. We are talking trillions. It's a new language that we feel privileged that we can talk about. And it's not one. It took us 38 years to hit the first trillion. Looks like it is going to take us 3 years to get the second trillion. My guess is as good as yours. Well, how long it will take us to get to the third trillion. That is the momentum of growth of equity. If you are growing at 25%, 30%, it means you are doubling every 4 years. Doubling in 4 years will not be 2 trillion, will be 4 trillion. Efficiencies that comes along with such balance sheet, capability that comes with balance sheet. But how is the distribution? 1.4 trillion is customer deposits. Shareholders have 218 billion. They have skin in the game. And because of that, global leaders also have come on the table and say, we fund the African Recovery and Resilience Plan with long-term funding. Here is 150 billion. Fund Africa to transform itself. And as you can see, that total funding of 1.8 billion, 800, call it 900 billion is in loans, 500 billion is in government securities, and 300 billion is in cash. Now you can see the ease of migrating the cash to loans. We can't wait for the macro environment to improve. We're excited that we're in the fastest growing region in the world. We don't think giving out that loans is difficult, particularly given that we are using digital platforms. So that's how the balance sheet looks like, expanding by 26% during a global macro headwind environment. Let's look at the income. We have talked about it. Let's validate what we said. Look at interest income growing at 30%. Interest expense, 53%. That's what we have been shielding our consumer customers from. We took the heat. We took the bullet on their behalf. I hope this will strengthen our relationship with Kenyans. That when we were called upon to be there for them, we answered, we responded. If your account is not in equity, we are not providing you with an umbrella. We provide our customers with an umbrella when it's raining. So I invite you that is the ethos of equity. That's what equity believes in. It's not when it means changing, safeguarding lives, expanding opportunity, are what it is. And hence our net income grew much lower, 21%, even lower than non-funded income, 30%, total income at 25%. But look at protecting the future, ensuring that we have a break with the end of the crisis, 139% growth in provisions. And that's how we have ended up with coverage of 90%. Inflation, exchange rate, you can see its effect in operating expenses and salaries. Total cost, 52%. We believe those things are over. And like me, I'm sure you are seeing the P&L I will present to you next year. It will be very different. This is a safeguard of the Kenyans. This is a P&L which is an umbrella during a rainy season for Kenyans. We don't need to continue when times are good. They don't need us. And that gives us profit before tax of 43.7 compared to 46 last year, 5%. But remember, we have provided an umbrella to our customers. The debate was, what do we do with the shareholders? So the board, in its wisdom, resolved to give the shareholders a record dividend of 15 billion shillings. That dividend is 4 shillings per share. And as you can see, the dividend payout is 36% of the entire 43.6 billion has been given to the shareholders. Dividend yield, 11.9%. Tell me of another company with a dividend yield of 12%. But more importantly, is the dividend yield on par. The equity share that we said is paying 4 shillings. When you bought and paid the price, the only amount of money that came to equity as capital is 5 cents. The par value of the share of equity is 5 cents. And for 5 cents that you paid, you are getting 4 shillings per year. And as you can see, even last year, the shareholders were paid 4 shillings. A sustained record payment of dividend, predictability. Shareholders, like customers, can count on equity group. So that gives us the income and statement, but if again you look at it, the next slide, you see what we talked about. Profit before tax, as you can see, the third and fourth quarter, they were very low. Why? Because that's when we decided to be prudent, to be aggressive in provisions. The 32 billion provision came through the third and fourth quarter. The engine is not impaired. There is nothing fundamental to change in equity. It's prudence, it's risk management. Take the heat and close the chapter of challenging, turbulent macro and go into the future confident that you can deliver in every respect.